There's the bell. Today is January 3rd, 2025. We welcome you on this Friday as we talk about market movers. We'll talk about what that means in the outline for this class in just a moment. We'd like to welcome Joe, Lee, Eva, JP, Silas D, and many others. Welcome to all. We also have Kevin in the chat. We welcome him here as well. I want to give you a quick reminder. You can follow us on X, first name with a capital J, last name, capital B, CS, and the same thing, Kevin Horner, capital K, capital H, CS. Follow us there. We do post educational content there, not recommendations, but also scheduling announcements, as many of you might have seen that today. I posted about next week as well. Now, just real quick, when we get into this information here, give a quick reminder, the information is provided for general informational purposes only. Should not be considered an individualized recommendation. Also, remember when we talk about securities, we're going to demonstrate some analysis and some trading functionality. We'll also talk about potentially from time to time, maybe if that comes up, options. Remember, options carry a high level of risk, not suitable for all investors. Also understand when we talk about examples, they are just that. Investing involves risk, including loss of principal. Now, when we talk about our agenda, what I really like to kind of really bring up here today is kind of talk about what happened in this last week, number one. Two, I want to talk about what we need to know from a technical standpoint and also a macro standpoint, and also what we have coming down next week, okay? And kind of have a big week next week in terms of some economic data there. And I also want to talk about some current potential trade examples as well that came from this week as well. So first, want to kind of just go real quick to the SPX chart, okay? And by the way, if you have questions, go ahead and just pop those in there, okay? Now, first off, I think it was like what, from last Tuesday, Christmas Eve, to pretty much, I'd probably say this morning, you had a very soft market. Like, just didn't seem like the market was following through on the bounce. Today, earlier, I'd probably say about noon Eastern, you started to kind of see the market firm up a little bit, okay? And what Kevin and I talked about this morning is kind of holding the 58.70 level or so, needing to hold that. Now, if I ask you what letter of the alphabet do you see on this chart, what would you say? Or what one or two letters on the alphabet would you actually say? Well, I think if I kind of drew this and see this kind of setup, kind of looks like there's maybe two V's, two W's, right? And when we are in trend number one, okay, I'll just say T1, that just means price below both moving averages, the 10-day moving average and the 20 or 30, either or. You tend to see you tend to get a bullish MACD divergence, and we've been sitting on one, but starting to see a little bit more of a turn. That is normal. Okay, so I'm going to kind of put that as number one. Okay, so when the price is down below both moving averages, you start to see a whole bunch of bullish MACD divergences. Number two, you start to see the price P gets down to equals or near HS. HS stands for horizontal support. That becomes pretty normal. The third thing that we would actually bring up is we tend to see a lot of W patterns. And my gosh, if you actually check my X page, you'd see that there was plentiful examples of W's. We'll talk about that here in a moment. These could be double bottoms. They could be slanted down bottoms like lower lows, but it maybe is breaking out as diagonal channel. Third one that might be your favorite is what we really call a tilted up W. So when we talk about the market wrap here, we're really kind of seeing these three key pieces of technical analysis: bullish MACD divergences, price equaling or at horizontal support levels, and third, a whole bunch of W patterns that we're starting to see. If we said which one is your favorite, we might say the tilted up W, which is this one right here. Okay, now the last one, did I leave anything off? I know I did. Did I leave anything off as far as technical pieces that we like to see when the price is down below both moving averages? Does anybody want to take a guess? The biggest thing that we would actually say here is that if we start to get more of a material bounce, we start to see diagonal D, B, O's, diagonal breakouts, okay? And you're going to see a couple of those here today. So now I want to kind of talk about some of the indexes, okay? Some of the U.S. ones, and also kind of make a correlation to kind of what we saw in the international market, just real quick. I'm going to just briefly mention a couple futures, not trade them, but just kind of talk about the futures with kind of what we see in the indexes and sectors, okay? And then what we're going to do is we'll talk about some individual stock names as well. So first off, when we kind of talk about where the market ended for the week and what it might be trying to set up to do next week is clearly with the end of this week, and I'll change this from a daily to a weekly in just a moment, decent bounce so far. We see a little green dot on the chart close above the high of the low day, okay? And my goal of this class is to kind of give you some ideas, or let's share some ideas together of how you can prepare yourself for next week. A lot of times we go into Monday, it takes a day or two to even kind of come up with some ideas. Forget that. We're going to do the ideas right now. You okay with that? Good. Okay. So one of the ideas is kind of maybe trying to get the market, as long as it holds the 58.70 or so, neutral, okay? By the end of the day, seeing a little bit more of a bounce, stronger, better than it was this morning. Now, when we go to, let's say, the 3-year weekly chart, you're going to see that we see that kind of if we talk about a candle, it's kind of more of like a hammer candle, trying to hammer out a potential support level. Now, briefly, when you take a look at, let's say, the NASDAQ, okay, super bullish, well, got a hold there, okay? This one kind of looks like more your downward channel, okay? And we could see where these highs are, right? There's a high. Whoop, there's a high. There's a high. And then we're kind of in that process of trying to make a high. Now, if all I do is just take a line and connect these, we can pretty much kind of see where the angle of resistance is. Now, remember, this is the fourth thing we talked about, the technical key pieces of bottoms, right? If we start to see the price getting above that diagonal line, the bears are losing control. The sellers might stop selling, and they might say, you know what, I'm not going to sell anymore. I might try to maybe buy on the breakout. That is something that you need to remind yourself of getting good at. I think a lot of people overly focus on horizontal breakouts and under focus on diagonal breakouts. Not after I'm done with you today, right? Okay, good. We'll have some practice. Now, if we take a look at, let's say, the Russell, Kevin and I kind of talked about this one today, just kind of really struggling. It's neutral, maybe moving averages. I mean, just reading what the chart is showing, moving averages by the end of the day turn green, okay? So that if you like small caps, trying to hold the 2205, okay? And the last one, but not least, if you look at the Dow Jones itself, kind of sitting there. That's lackluster, okay? Not as strong as the other ones like the SPX and the NASDAQ. That one has definitely underperformed. And as Kevin and I talked about this morning, okay, the U.S. dollar, seeing how these are large multinational companies and the U.S. dollar that's actually had a pretty large push, some of those companies might struggle in terms of selling their products abroad in their currencies, okay? Now, I want to ask you a quick question, just real quick. Tell me what you see on the VIX here, okay? What do you see on the VIX? Bullish, neutral, bearish, okay? Now, when the market had been selling off this last week or so, week and a half, which is not unusual, okay? Especially in the first couple weeks of January, probably about the first 2 weeks of January, the VIX did get above 18, but so far not really that much above that. Today kind of fell back down, sitting here about 16 or so, okay? Now, I want to be consistent with what I've talked about. When the volatility spikes, it doesn't tend to last forever. People tend to, when the volatility goes up, prices fall. And when those prices actually fall, some investors maybe are long-only investors, and they use those opportunities to try to get in, okay? And so my takeaway from the VIX is not much fear in the marketplace. Not a whole lot of panicking here, okay, so far. Now, when you take also a look at I call it the international VIX, okay, /6J. And if we would have said, my gosh, there's so much fear internationally, we cannot say that, because when you really take a look at what we see here, the yen barely even went up. Okay. Now here's the thing. You have been seeing selling in Asia, which on like China. We saw continued selling in, let's say, Europe, Latin America, Canada struggling a little bit, Germany, Switzerland for sure, Australia. And the only area of the market globally that kind of held up in terms of relative strength was Japan. And they might be getting a little help from a weaker currency, with it, which might cause their domestic companies to sell more products abroad, boosting sales, boosting GDP, and so on. So I'd probably say that the U.S. markets and then Japan, okay, are probably the strongest in looking at the week, okay? Now, I want to ask you a quick question. Anything that we missed here that we want to kind of sum up? And this is very important, because what we're trying to do is we're trying to get a framework of where is their investor interest in terms of trend, momentum, and volume. That could be stock volume or option volume, all of the above, okay? Did we miss anything? Well, so if we kind of just took a look, and we're going to get into kind of a little bit more stocks here in just a sec, we did see a little continuation on crude oil. Talked about this yesterday. Now, I want you to kind of notice, tell me if you've ever heard of the tippy toe trade. You ever heard of the tippy toe trade? Now, when you invest long enough, you can come up with your own strategies. Okay, there you go. Now, the tippy toe strategy is some people like to buy maybe right off a moving average because they think it's potential support. Now, one of the areas that's been doing that, it's not the only one, but we kind of see crude oil falling down to the 10-period moving average and then bouncing, falling down near and or at the 10-period moving average and bouncing, falling down at and or near the 10-period moving average and then bouncing. And then today, doink, falling down to the 10-day moving average and bouncing. Now, after the 50th time of doing that, someone might come up with an idea and say, geez, maybe I should set up a buy limit order right near and or at the moving average. Now, sure hope that it doesn't take 50 times to see that and you come up with that idea. But I'm telling you, when we talk about some individual stocks, you're going to see a lot of stocks right now that are doing that. Now, what's causing that? Who is it? Who's doing that? Who is it? Is it technicians? You sure think so, right? I mean, it's coming down within pennies of those lines, and someone just miraculously buying within pennies of the moving average. Somebody is watching. They're taking advantage of those dips intraday and then buying. Crude oil here today for the fourth day in a row, bouncing off that little support. Now, by the way, in our examples, we're going to come to a couple of those, and we're going to try to take advantage of those instead of being taken advantage of. That's not very fun. Now, I just want to kind of make mention, when we talk about the market wrap here, the biggest thing is you got to keep an eye, and I'm going to bring this up more next week, okay? The U.S. dollar has been very strong, did make a brand new high. So if you're sitting on U.S. dollars, that U.S. dollar compared to other currencies, quite strong, okay? It's not a bad thing for the most part. Now, if you take a look at also interest rates, okay, rates 4.59. So if you like fixed income and you said, geez, what could I get for T-bills or what could I get for CDs or anything like that, though that 10-year rate is pretty high. Now, if you're the borrower, might not be as fun. So we see that the stock market, at least SPX and NDX summarized, trying to get a little bounce here. Second, not much volatility on the VIX and on the yen, not that much. Third, when we actually pull up, let's say, the US dollar, quite strong. Rates still quite strong, which kind of gives an expectation that they think the economy is probably going to be fairly strong. Else, that rate probably would not be where it's at. Okay? And then last but not least, kind of seeing a little bounce here on crude. Now, I want to kind of also make mention for some of you cryptos, people, investors. Now, there's always two sides of the road here, right? One way going this way, the other way going this way. Some investors like crypto, I'm not asking you to like it. I'm just asking you to look at the chart. We did see a crossover finishing the week on Bitcoin. We also did see that crossover, not just on Bitcoin, but also if a stronger crossover on Ether futures, Ethereum. Okay. So a pretty decent move there in the crypto space if you like to look at those. Now let's kind of remind yourself what the goal is. We do not want to come into Monday and say, geez, I wonder what I could potentially look at. We want to look at the week in review, technically and also fundamentally macro, and kind of get an idea of where the market ended, because if those trends trend, then we might have a watch list going into Monday. All right. Any questions first off? Yeah. So now if I were to ask you a question such as what sectors, and let me say it like this, what sector kind of surprised us a little bit here today? Any sector that kind of surprised us here today to finish the week off? Any takers on what that might have been? Now, remember we talked about, I believe it was yesterday, how when we looked at sectors, you just saw that there was only one sector, energy, that was really in the green. And that was right here. And the rest, no, number two just means price is above the 10 period moving average, but not the 30. Okay? If it's that's a number two. Trend one is price down below both moving averages. Now, today, sentiment-wise, better than yesterday, because in the sectors yesterday, there was only energy. Today, what did we see a little difference on? Financials got a little bump. We saw technology get a little bump. Better, okay? Healthcare, okay? Bandaging itself up a little bit after being tarred and feathered to the downside. Healthcare, better. The one that was a little surprising was utilities, okay? Now, I'm not going to go down that route today. That's not my examples. But the one thing we did see is over the last, let's say, 3 weeks, utilities did firm up a little bit. Relative strength better. And the one thing that we did notice is we did see the 10HC to finish the week, okay? The 10HC, the 10-hole counter. Number one, the color of the background represents the moving average. Scripts not guaranteed for accuracy or timing. Verify. Okay, so if we have a green background, the moving average could be green. Verify. What's the number in the box? The number in the box represents the number of days the moving average has been green or red. So if we have a green background and it says 1, it means that moving average has been green for the last 1 day. Something fresh. Smell that? Okay, fresh. So the whole idea is to not try to get something that's been up for 35 days in a row, but maybe something that might be earlier into the move. Energy, for example, has been 7 days, okay, green. All right. Now, so utilities being a little stronger. Let me tell you what the utilities look like, and then we're going to move to individual stocks that we kind of saw some examples on. Now, if we look at this, now remember on the SPX itself, we saw a W, okay? We did see kind of the W pattern on the SPX. When you look at, let's say, the IXU, utilities, kind of more income generation / dividend and so on, we did also see the kind of a variation of that W, tilted up W. Do you see it? I need to make sure we're on the same page. Now, here's the deal. Can you name me the 4 technical signs of bottoms? Type it in the chat. What was the first thing? Type it in the chat. Now this, if someone told you that you're going to come to a class on looking at the week in review and you were just going to sit there and watch me, surprise, okay, that's not what's going to happen. This is where we kind of have that discussion back and forth. What's the first thing we actually said? Bullish MACD divergence. What's the second thing we said? Price falling at and or near the horizontal support level. What's the third thing we said? W patterns. What's the fourth thing we said? Diagonal trend line breakouts. Okay? So remember those 4 things. If you can't remember, write it on your hand. Not a recommendation. But those would be kind of some of those telltale signs that you could be nearing a bottom. If we're near some bottoms, okay, we start to see those and we start to get above the middle of the W. This right here on the right-hand side that we saw today to finish the week, ladies and gentlemen, boys and girls, that's a brand new higher high. If you got a brand new higher high than that, okay, the middle of the W, then you're seeing that reversal on trend. Now, I'm going to tell you, this is where we kind of get negative James, negative Bob, negative Kate, whatever, where someone says, yeah, but I'm not going to get in until we take out the old high, because I don't want to make for sure. But maybe we do that, and the investor says, now it's too high. So you got to understand that there's a trade, potentially, that if that stock makes a high, some investors might try to get in some now, potentially. Second type of trade, can the group get above the 785? That's a second area. If it gets above the 785 and bounces off the 785, that's the third setups. So it's not just one setup. There's going to be multiple setups if that area were to reverse. Keep an eye on utilities, okay? Now, I want to go back to something just really quick, and I want to pull up something. Now, first off, we're going to go to schwab.com. Now, does anybody know where this is? I live in Salt Lake City. This is Zions National Park. Believe this is Angel's Landing. I read the risk disclosure to take that hike. I decided I was not going on that hike. Okay. But if some of you have been on that hike, you'll know that the cable was the best friend to make sure that you were staying above support. Okay. That is a pretty picture overall. But now what I want to do is let's kind of take a look at some of these, some of the data that's coming out next week. Now, first off is when we pull this up, if we go to, let's say, where it says research, okay? And what I want to do is I want to go to calendar. So if we're taking some positions, which we're going to do now, I kind of want to know what are some of the things out there, okay, that might cause some of these positions to move or for the good or bad. So if we go to research and calendar, I don't want to find this out next week. I want to find it out now. Some of the things, if I go to this, now number one could be earnings itself. The financials kick it off. Those are coming up shortly. But what I really want to kind of focus on is on economic, okay? Now, if we take a look at the economics, we actually see that if we look at, let's say, on the 3rd, the only thing that we had really coming up, well, this week was PMI, okay? Housing data, Schiller housing data, construction, continuing claims, crude oil, initial claims, which comes out weekly, mortgage applications, which you're going to see that was horrific, okay? And that's not really that surprising considering where the rates have gone, okay? And if you look at today, we saw the ISM Manufacturing Index. Now, does anyone notice anything on the number that looks a little unusual? Well, you like to see something above, you like to see this number above 50. The actual is 49. You get below 50, okay, you start to get multiple readings below 50, not just one reading, but probably 2, 3 plus. If you get below 50, that's like contractionary, meaning the manufacturing index is tightening or the economy is tightening, and that actually might mean slowing of sales in some areas, slowing of growth, slowing of GDP, and so on. Keep an eye on that. Now we have, the transition between in the White House that kind of might be causing a pause there. That's something to keep an eye on. Now, as far as, let's say, getting into next week, you're going to see that if we take a look at this, we'll follow up with services, okay, on Tuesday. Then we get into the FOMC minutes. Oh, dear. That would be a big one to know about, okay, Wednesday. And you're going to see that coming up right on to Friday, guess what we got? Ding, ding, ding. Jobs numbers. Why does that matter? Well, how strong is the economy? Do people have jobs? Are they willing to spend money? It tells us something about consumer confidence, retail sales, and if people are willing to buy stuff, you need to manufacture stuff. So it matters a lot. And the last one is really the Michigan consumer sentiment. So we do have kind of the first week of the month, okay? And for this coming Friday, the first Friday of the month is usually where we get the non-farm payrolls. Here, it's a week later because we had New Year's this week. Now, so those are kind of some things to kind of keep an eye on. And we definitely want to look at what the forecast is versus the actual, or vice versa, right? What did it actually come out at versus the forecast? And how does that affect the interest rates and the dollar? Okay. Now, what I want to do is let's kind of talk about, take the rest of the time and talk about individual trades. Okay. Now, David actually says, I get scared just looking at the picture. So my wife, she wanted to go, not skydiving, paragliding. Was it paragliding? Something like that. Anyway, moral of the story is my wife goes, oh, you want to go? I was like, no, if something happens, I could be here for the kids. So, when you're older, you got a couple kids and, at least me and my wife, we don't go together. Okay. Separate. She had a great time. And I watched from the support area on a nice chair, sucking on a nice little drink there. Okay. So you're right. It does look a little scary on that Angel's Landing. And if you actually saw the actual more pictures, it's even probably scarier. Okay. Now this morning, Kevin and I, we talked about the semiconductors. The neighborhood was really, super flat. Okay. Now, we made the comment that sometimes the group doesn't look that great, but sometimes investors might pick individual stocks that might be outperforming the group. Now, the group could be an industry group and or a sector. Now, one of the stocks that we got an alert on was NVIDIA. Okay. Now, let's kind of talk about some trades here. We're about halfway through. Let's take the next 20 minutes. Let's talk about some trade examples. Now, one thing I want to kind of bring up here is sometimes if you, let's say, work throughout the day, you're not looking at the market. Sometimes your trades might be done at night and you're trying to get filled in the very next day, etc. That's kind of what we're doing here. We're taking kind of what we're seeing on the chart and then saying to ourselves, well, could we play some trades that we could try to set up for going into Monday? Now, if you kind of take a look at this goes back to one of the kind of the technical setups we talk about, which is price getting below that support level. It tends to be less than 10 days. And all of a sudden, the stock snaps up back up above it. It held the support, but it did fall slightly below. And then you see a pretty decent turn. Notice the hold got yesterday with a gap up in the price today. All right. Now, what you now see is this is maybe acting as potential support, this acting as maybe potential resistance. Because if I ask the question, does the market, SPX or the NDX or Dow, does any of those three indexes look like this? And immediately your answer should be like, well, duh. No, the answer is no. Okay. Now, second one, when we actually go back to I'm going to fast fire a couple stocks. Another one that's kind of doing something pretty strong is Take-Two Interactive. That has a low and a higher low. Okay? Not much of a pullback off this prior high. Matter of fact, this update today has almost knocked us right back to the prior high. Now, when you look at two financial companies or technology companies, speaking of diagonal resistance, we did actually see on PayPal, okay, lower high, and another lower high. Notice where those highs are coming in at resistance, okay? They're coming in right at the moving average line. Notice on the bottom, low, doink. Now, what's the $1 million question? How do you know it's going to go up? That's what I used to say when I lived in Kentucky. How do I know it's going to go up? You don't know it's going to go up. I don't care if the market is going up. I don't care if it's just going up a little bit. I don't care if it's been down and it's starting to go up. Say this to yourself. Every entry has a risk. Repeat it. Every entry has a risk. You think sometimes there's less risk? Okay. It's not true. There's always risk. Okay. Now, if you take a look at this, if we had time, that is a diagonal breakout on PayPal. Now, that move in PayPal and Square are somewhat, I believe, related to some degree. Check me on that. But we did also see a diagonal breakout on that one as well for the week. So remember, the goal for this session is not just to talk about market, like kind of what did the market do, but what are maybe some areas that we could be prepared going into Monday? Well, both on PayPal and Square, kind of seeing a little breakage above the diagonal line. Okay, so keep an eye on those. Now, I want to also go back to just real quick, American Express. Now, if we go back to American Express for just a second, you're going to notice on this chart, we kind of see lower shadows. And then yesterday, lower shadows. And then another day, lower shadows. What is that telling us? Is it telling us anything? Talk to me, okay? What is that telling us? Is it telling us anything? Or is it just like, no, it's completely random? Now, you got to remember, when that price was down, okay, someone or some people, persons, he, she, entity, and so on, someone bought at the low of the day or stopped selling. Someone bought or stopped selling at the low of the day. Same thing. Someone actually bought or stopped selling at the low of the day. Why? Now, we talked about PayPal, we talked about Square. You actually bring up a little American Express. What you're now seeing is on American Express, a little pokey above the diagonal line. When do you tend to see diagonal breaks? Answer: after the prices have been in trend one. And remember, we talked about the 4 points of bottoms, right? The 4 technical keys, right? Bullish MACD divergences, price at and or near horizontal support levels. Third, what was the third? Tell me what the third was. Okay, W patterns. And the fourth, diagonal breakouts. You kind of start to see all those kind of together. Kind of smells like a tradable technical bottom. If you start to see prices start to get above the middle of the W's on W patterns, that maybe sell-off might be losing some of that power. If we start to see prices break the diagonal line, bears are losing control, maybe A, they stop selling, and then second, maybe buyers start to get more of a signal of what they're trying to see anyway, a bullish breakout. Now, a couple other stocks here, I'm just going to kind of fast fire a couple. Palantir was also quite strong as well. Okay. Not much of a pullback, pretty big push here. We did also see Fortinet has actually done pretty good in terms of relative strength. Definitely carved out a support area of about 93 and change. If we take a look at Meta, okay, that's another one where we kind of had like a little moving average crossover. That has only been up for 1 day on the 10 and the 20 period moving average as well. Okay. Now, just a couple others. Remember the tippy toe strategy, right? Someone buying near and or at the moving averages. And you see that if you look at BKR, that's another one where someone has just been buying right off the moving averages. So I would say, in wrapping up, from last week, probably the December 24th, okay, last Tuesday, till like this morning at about 10, 12 Eastern, markets were just marshmallow soft. Not a lot of appetite for buying at all, almost anything, okay? Today, firming up somewhat and starting to show some better setups. Now, since we have Eva with us, we did even see Simon Property Group getting a little push as well. Wrapping this up, when you take a look at other stocks that are getting a little push, not much of a pullback in terms of GEV. That is almost a brand new high considering. And also when you take a look at another stock that's kind of getting another little push there, had some news with JBL as well. That is kind of more your classic flag, run up in the price, double bottom, and you're kind of right on that edge as far as the diagonal breakout. Keep an eye on Amazon, and we're going to say Google as well. So if we said what two stocks kind of really have more like flag-like type of setups, we might kind of say that when you look at Amazon, it kind of more look perhaps more like this. And Google kind of more looks like a symmetrical triangle. It doesn't matter. The moral of the story is, can it break the diagonal line? Don't get caught up in as symmetrical as it, more like a flag. Watch the diagonal line. price breaks the diagonal line, bears losing that control, maybe they stop selling, and bulls start buying. So 2 flags and ending here, probably say Google and Amazon, okay? Now, I got to wrap it up here, but I want to kind of give us a quick reminder that this class is really done on a weekly basis, okay? And what you're going to notice is you can follow us right on YouTube, okay? And it's free. So just go to that link that I sent you. You could subscribe right in the middle of the page. Second, you can also go to this link, and it's going to show you also the webcast for next week. And next week, I'll be doing a couple classes. Make sure you take a look at that calendar and see those for our schedule. And if you say, I'd like to follow some of the other classes you and Kevin do, go to the links here. Or you could actually say, hey, when is Kevin teaching? And if you say, when's Kevin teaching? It's going to pull up Kevin's schedule or any coach. I'd like to thank Kevin for answering those questions in chat. Remember that with what we talked about here today, it was done for example, illustrative purposes only. I want to wish you a happy and joyful weekend with your family and friends. And also remember, this has been the class on market movers for the week and also setting up in the next week. With that said, thank you so much. Take care. Bye-bye.